just from the background of business and how much we looked at stuff and the financial acumen we talked about in the home and then what I do actively, commercial assets made a lot more sense to me than the single family ones.
Welcome to the Real Estate Investing School podcast. I'm your host, Joe Jensen. Our guest today is Tyler Thorne. Now, the reason I'm laughing and why I'm so excited about this podcast is this is our third attempt at recording this thing. The world and the internet and technology has been against us, but we're finally going to make it. Welcome to the show, Tyler.
It's good to be back.
Right, good to be back again, third time. So Tyler, he's been doing direct to home consumer sales with Vivint for 7 years. He's the founder of the KC decentralized headquarters for Vivint. 5 years investing in value add and development of commercial and multifamily assets. He's also the host of the Money Game podcast. Everybody should check out. He's done 8 deals in the past 6 years, all while running and building his active income through his sales empire. Anyway, we're stoked to have you here, man.
Dude, happy to be here, man.
So yeah, we can dive into it. Hopefully the technology holds out this time. We get through the whole thing. I'm a little late because I was getting ready to do this. And then my daughter, my 6-year-old, she's like, hey, can we go on a run? And I'm like, it's pitch black outside. It's like they're already up way past bedtime. But I'm like, it's Friday. Yeah, we can go for a run. And so we went and did a little jog around the block. And I was like, you can't say no to that. You know what I mean?
No, you gotta take those moments.
Dude, I love seeing them be passionate about their fitness and being active and exercising. They don't know that's what they're doing. They think they're playing, but I love it. So
It's way cool.
You have kids? How old are your kids, Tyler?
Yeah, so I've got 2 kids. Mine been down for a minute. My oldest daughter she'll be 2 in January, and then we have a new baby that is like 4 months.
Oh, nice. Just brand new, brand spanking new. That's awesome, dude. Well, congrats. Well, sweet, man. Definitely a busy man then with, newborns and 2-year-olds and your sales group, but you're still investing in real estate. I want to dive into your story. You've actually kind of got a unique beginning to, how you got introduced. A lot of people, I'm like, I love the origin story. Like, how did you start seeing real estate as an investment? And so many people, they read Rich Dad, Poor Dad, they talked to somebody in college or, whatever. Yours was a little different. Tell us about your upbringing and how you were exposed to this kind of stuff.
Yeah, it's funny because, as we've gotten to know each other a little bit, I didn't realize how unique my upbringing was really until I stepped away for many years from home and, mission and then living away for 8 years. But my dad's core business, he's an entrepreneur, and his business for the last 30 years, he's kind of the guru behind the gurus. So all of the biggest guys in real estate coaching or stock trading, flipping homes, Tarek Musa, Dean Graziosi, Charles, he's got, Cardone's hit him up. Like some of these guys that all of us know, he does their books, and he's just been in that coaching, development, self-education space forever. So our conversations at home as a kid have always been super unique. And the background, the reality of the education space and these masterminds and groups and just whatever you can actually think about, you can go get it done. And obviously all those guys' investments, kind of the key point there.
That's cool. So these names that have inspired a lot of people, those are just like around the dinner table for you guys. Sometimes not even the name, the actual people.
Yeah, no, it's interesting. And I definitely, just being younger, and we lived in the Midwest rural. So obviously these guys are Phoenix, Malibu, wherever they're at. But yeah, these are people that my paradigm, my lens as a kid was like humanizing these ultra big people, these accomplishments, because they weren't like way outside our world. And these were people that my dad was working with, and these books were coming in and out of our home, and he was running a big business and doing these things. But this was just like my dad, your dude that sits at the dinner table that is a punk and like you're super close with, and you ride each other. And so those things didn't feel impossible from the get-go.
That's so cool. I love that. Like I said, just the normalizing of it. I think that a lot of people are still trying to do that with like just kind of where they talk about changing your thermostat, where it's like if all you know is this, you can't really like get it above that. But if you raise that thermostat, to like, no, there's a whole nother level that's possible. I love that. Just normalizing what's bigger. I was actually watching some of your podcasts and some of your Instagram, and you were driving through this neighborhood of these like multi-million-dollar homes. And you're like, yeah, I like to do
Yeah.
this. Like, one, it's cool to like have a vision of like things I can have, but I like to just see how many homes there are, how many people do it. It's like it's so doable. It's not like this weird, unique niche thing. It's like there's so much success out there. It's so doable.
Dude, that's one of my favorite activities, doing that with homes. And then I tell this to my sales reps all the time, and it's been such a big investing thing for me. It's we get so bottlenecked and we think that, there's one vehicle, especially, certain companies preach this. Dude, there's a million ways to make $1 million. Like there really is.
Mhm. Yeah.
And it's more about like who are you gonna have to become? What circles do you need to be in? What rules do you need to play by? But like, so for me, that's a big activity in not even just homes. This is something I tell all my sales reps over and over and over again. Like just the abundance of understanding how much economic success there is and how many lanes there are, and it just is about becoming somebody. I'll do the activity. Look at the wall, look at the paint. Just describe every physical thing you can see: mirrors, stop signs, lights, fencing. Any physical thing you can see. Somebody
Mm.
owns a company making millions of dollars selling that, like that random thing.
Yeah. That's so true. I always think that I'm like, somebody's making a fortune off of paper clips. It's like
It's,
that's crazy.
yeah.
Yeah, I love it. And the same thing's true with real estate specifically. It's like there are so many different ways to do real estate, from dirt, from just land, to mobile homes, to trailer parks and self-storage, to single family homes, to luxury stuff, to flips and short-term, mid-term, commercial syndications, passive. Like there's so many ways to do it. And it's like they're all right for somebody. And it doesn't really
Hmm.
matter necessarily. So what was your kind of first intro to do it? Because I know now you've been doing some commercial stuff and like more like funds and things like that. But what was your
Yeah.
initial like? What was the first deal? Because you kind of were raised in this world of building your dream, and real estate was obviously a part of that. But at what age
Hmm.
did you actually like pull the trigger and start playing in the game a little bit?
Yeah. So I got in as soon as I could. I bought my first property at 22, and
Mm.
it was, 2 years after I had started my sales career. And I came back. I had obviously Dean, now he's everything, but originally he was a real estate guy. Yeah,
Dean
selling
Graziosi.
real estate book. Hmm.
Yeah.
I'd read all his stuff, and I'd read all the grants, and I did everything that you can do without actually doing the transaction.
Right.
And it's funny because I have a lot of people I could have reached out to, uh, my dad being one, and been like, "Hey,
Sure.
I'm going to do this. Walk me through the steps." But I was pretty prideful, and to a fault, like still in a lot of ways am. But in this moment, extremely. And I was like, "Dude, I can do this on my own. Like, I'm gonna earn my stripes." So I just did the whole freaking thing solo, and there
No
was
way.
definitely some hiccups uh, along the way of the way that I executed it. I ended up, offering before I qualified, and had to figure out how to qualify after I offered. It was like super stressful for a moment trying to get everything to work out, but it did. And luckily, it was a great property, was a great investment. So,
I love that. One thing I love about real estate is it's so forgiving, right? Like because you have these due diligence, you have this escrow period where it's like you got it under contract, you weren't even qualified for a loan yet, but it's like, but that's okay. You know what I mean? You can do this in next week and the next day. Like you can do it out of order and you can do it clumsy. And I think that's one reason why it's so attractive is like it's so forgiving that you can get your feet wet even imperfectly. When some businesses are not like that. Like if you jump in messy, like you could really get hurt. But real estate's pretty forgiving. So you bought what kind of asset did you buy?
yeah, so I just bought I'm not a handy person at all. So when I started looking at deals, I knew from the get go, hey, I'm not going to be the guy that can come in and buy some old thing that I'm going to value add to paint and do walls and all this crap. I'm like, there's no freaking chance I'm doing that stuff. So
Yeah.
I bought a new construction uh, townhome, but I had looked at the numbers every single day. That was part of my routine. I put in that I wanted to get familiar with the numbers. So like I had looked at every sale in this area for months.
Mm,
And
that's
this
awesome.
came up and it was a person. I didn't know why it was lower, but I just knew it was lower. Called the realtor. They were like, yeah, this guy bought it. He got transferred, like emergency transferred, but all of the new units were selling for like 30 grand more than he was asking because he just
Mm,
wanted to undercut the new builds out so
yeah,
he could just get it done. And I just went over there that day, offered, pulled the trigger, like just sent it.
love it. Well, and that's so cool, like you said, that because you are aware of the market, like when the right deal comes along, it's not like you're just blindly throwing in an offer. It's like, no, you knew, but the moment you
Yeah.
saw it, and I remember having deals like that too, Marks. I've been looking at, and the deal comes along. I mean, just when I was sitting on an airplane, and I'm like, yep, put an offer, and I got it. I was like, messaged my agent right after she emailed it to me, and I'm like, yep, that's the one. Like I know because I've already been looking at this market for so long, that it's like just do it. And then when you're at that point, it's like, and if there's things you don't know and it's not right, you can still back out, but it's like close enough to like at least go get it started.
Oh, dude, for sure. I think one of the things, I had somebody ask me from my sales career, I was presenting at a college the other day and you're like, what's one of your biggest takeaways? And honestly, one of the things I said, I've done a lot of things outside my career from an investing standpoint that don't actually have to do with sales, but I'm super grateful. There's no way to learn how to sell somebody other than just go pitch. Like you
Yeah.
have to just go pitch and you figure it out along the way. And that kind of just like led into investing. Like, dude, I'm gonna study everything I can, but I'm just gonna try to mitigate the levels of danger to where I can
Mm-hmm.
just go try and then go back and find the information and then go fix it along the way.
100%. I think that really never stops. I think that's how you grow in real estate. So, in fact, tell us how you did that. So you started with this little like townhome. You kind of house hacked it.
Yeah.
Had roommates in it and whatnot, and just had them help cover the mortgage. And like, cool, I got into a property. But now you're doing like multi-million-dollar commercial value add stuff. You're still not swinging a hammer painting, but you are doing the value add stuff now, but on a much, much larger scale. And I think a lot of people want to do that. They're kind of where you started. Maybe they have two or three, but
Mm-hmm.
it's still the same thing. And they're like, man, how do I get into those multi-million-dollar deals? How did you do it, man? Like, how did you bridge that gap and get there?
Yeah. I think a lot of people have different ways that they can play. For me, obviously, I super uniquely blessed with the background that I have my dad in. So that's not his core business, but being behind these guys, obviously, he was super financial. Like his financial acumen was incredibly high all across the different sectors. Um, and he'd done a handful of deals. He had a brokerage at one point, doing a bunch of different stuff. And so he just has all these relationships, but he didn't have the time. And it was never like a key focus of his to do these
Mm-hmm.
commercial asset deals. Um, but as he's gotten older, he's gotten more time. He's kind of downsized his business. And I got to the point where in my active income and the things that I was doing away from home, I was, sufficient enough, making a couple hundred grand a year at this point where I just went to him and I was like, look, dude, I want to come play in this arena. Uh, Give me a time every Friday. There's all these people out there that, you could get mentors. Like, this stuff. Like, let's play this game. But like for real, let's play this game. I want to come meet with you. I'll meet with the brokers. I'll do the legwork. I'll do the crap you don't have time to do to earn the right to be in the room. Um, and I'll put my name on the line. Like I'm not putting my money behind. I'm like, dude, put my name on the sheets. Like let's
Mm,
put my financials against it. Like I'll play the collateral too.
I
Um,
love that.
And that was when he kind of, we started meeting and meeting and meeting, and he realized, we would sit down and he'd give me, he just has a huge deal flow that he never gets to.
Yeah.
And I would just go follow. I would go hunt those down. I'd go walk the properties and I'd go look at a ton of stuff. Uh, and honestly, just from the background of business and how much we looked at stuff and the financial acumen we talked about in the home, and then what I do actively, commercial assets made a lot more sense to me than the single family ones.
Yeah.
It's a business. It's a business that's tied to a physical place, but there's balance sheets and there's income statements and rental. There's a lot more financial statements to it, and you can force appreciation by enhancing the business, not by knowing the neighborhood necessarily.
Yeah, and that's one of the things that I think is so amazing about commercial real estate, whether it's literally like a business or whether it's just a multifamily with 5 or more units, but is you can manipulate the value of it based on the net operating income. If you lower expenses and raise
Mm-hmm.
income from raising rents, all of a sudden the asset, the physical building, is now valued more. If your townhome that you first bought, if you raise rents on your buddies $100 each, the value of the home didn't change a penny, you know? But with
Yeah.
commercial, it's like you raise everybody's rents and get a cheaper contractor to do your handyman work and make some utility improvements. And all of a sudden you just created $1 million worth of value out of thin air, which is like the coolest thing about how they value commercial. Yeah, which is just amazing. So, and that's obviously, something that attracted you to it.
Yeah. And I think everybody that I looked at from, his world, and then I'm always digging into these ultra people and then looking behind the scene of what are they then doing once they've got their course and they've got the active income. And at the end of the day, the in play that everybody was doing wasn't doing little single family flips. Like, that might be the active side, but everybody was allocating the excess cash flows into these commercial type assets, multifamily storage, commercial retail, whatever it is. It was assets large enough that you could buy management in place, and the financials still made self sustain and not have it be another job. You were
Yeah.
buying businesses, and that was where it was sexy to me. I'm like, well, let's just do that now.
Yeah, well, that's what's so cool. Like, say you're not managing yourself; it's not even possible. So there has to be the margin to have someone else run the whole thing, which is like, say, that's way
Mm.
more attractive than taking phone calls from angry tenants and stuff like that. Um, so let's talk about how did your first commercial deal go down? Like, how did you find it, and how did you kind of vet it out, and what was it like actually pulling the trigger on something much larger than the small residential stuff?
Yeah, so it was interesting. Before I had gotten in, my dad had did a couple deals, and he had turned, he built like 50 townhomes, and institutional money came in and bought it off him. And he cleared, like, it was a good chunk, a couple $1,000,000. And it was like a 2.5 year thing. And so he didn't have time. This isn't like his main thing, but as we were sitting down, he was looking for another place to put that. And I was like, dude, I think we could recreate that project in a couple different spots. And I was meeting with some engineers and some realtors on, like, how likely is it we could take these pieces of land and do the same thing. And honestly, in that moment of being with brokers, with an agent, it just so happened, literally as we were talking about these deals, the very, very first one that I participated in, somebody had called her while we were there talking about these other deals, that we were going to look at this piece of land. We've still actually never done any of those deals that brought me to this first one.
Mm-hmm.
Uh, she had somebody, just a distressed seller, that really, really needed to get out of something before the end of the year. And it was a local dude. He didn't want to sell to institutional money. She had a lot of institutional buyers, so she needed somebody local. And so we drove out, looked at the place. It was a nice older brick, 25 unit deal. And we were able to make it happen. So we did that. And, we looked kind of just simple, like, in a commercial asset, like when you get something, you get the rent rolls, and we got them. We're like, okay, he hasn't raised the rent forever. There's some vacancy
Mm-hmm.
stuff. There's pretty long tenants. It was literally just one of these things. He was a single operator. His wife was running accounting, and the math, you're looking at the rent rolls like, dude, these are way under. We go run the comps. And the crazy thing about it too, I've had a lot of people ask me, this exact question. Well, how are you doing your due diligence?
Mm-hmm.
In these larger assets, like I'm not personally like running that pro forma. There's attorneys that'll do that. You go pay, like we have an attorney who will go do a pro forma who's been private counsel on a REIT and a
Yeah.
public REIT, and then he's been outside counsel on a private REIT. And it's like, you can bring in A-level team players to these type of deals to play these pieces, and you can just be the leader, the GM of that. And that's kind of like what I've been doing.
I love that because, like I say, when there's enough margin to go around, you can bring in, like you said, the right people. We talked about that on the management side, but like you said, even on the acquisition side, it's like if there's enough money to pay the right people, then you can do a lot more effective things than you trying to wear every single hat because you're not going to be as good as someone that's been doing it for 20 years. You know what I mean?
No, in the reality is as I've gotten into these, I start studying the Ray Dalios. I've been studying Jorge Perez, been studying all of the Blackstones, and how are they running these deals, and how did they come up in this world? And none of them are doing that, right? Like it's entire teams. They bring in specialists for each individual piece of the due diligence cycle. We have an engineer we like to use that comes in and runs certain things. We have a great attorney that does certain things and has been specialty in that. Yeah, great brokers that bring the deals off tape. And we have great bankers. The crazy thing in the commercial assets, like the banks will do a lot of the work for you because they
Mm-hmm.
want the loan.
Yeah, when I noticed that even on the smaller stuff, like if the lender wants it to be a good deal because they're putting money into it. The last thing they want to do is put money into a bad deal. And so if the lender will go for it, like you're probably pretty safe. You know what I mean? And that's true from the single family little DSCR loans all the way up to, these multi-million-dollar commercial loans. Like no one wants to get burned on this. And so it's like it kind of helps mitigate your risk.
Oh, for sure, for sure.
That's awesome, man. So how many, you've done like 8 deals in the past 6 years. How many of those were like kind of the single family house hack starter stuff? And then how many have been like these commercial deals?
Yeah, so literally just one was the single family house hack.
Nice.
Yeah, I know. And then just kind of was like, dude, let's do this. So we have two separate 25 units. We did a commercial retail plaza, developed a little neighborhood that we're selling the lots. And then we have 140 single or the build to rent that we're developing right now.
Mm.
40 units for senior living, 55 plus communities.
Oh, cool. Yeah, what a good niche that is, man. Like talk about weeding out a lot of the riffraff of tenants. I've been thinking about those lately. I'm like, man, that's like great. You don't have kids. You don't have like, I don't know, just petty things as much. You know what I mean? It's not like people are just, I don't know, they just seem a little more established and a little more responsible at that age.
Dude, it really is crazy. And just, I had somebody ask me like, well, how did you kind of know to do that? And so it's interesting. Like, dude, I grew up in Kansas City. We've lived in this area forever. My parents have lived here. A lot of our professional relationships, familiar relationships are here. And so we have like a pretty good grasp of just what's missing,
Mm.
and the demographics and the need. But the thing with these commercial assets, like one of ours that we have up, literally all we have on the site right now is like a sign. And it's just like a wood sign that says it's 55, and we have like 50 people on a wait list for 40 units.
That's awesome. Zero marketing, like no
No,
advertising,
nothing.
just a sign out on the dirt while you're building. I love that. That's cool because yeah, I knew you did like some value add stuff, like these mismanaged properties. You go in and make it better. But that's
Hmm.
cool that you're doing actually build to rent on some of these, just knowing that there's that need. What's that like with today's market and the kind of like the economy right now? What's it like building? Has that been a nightmare, or is it actually coming out okay?
Uniquely, we've been super lucky.
Awesome.
We're doing super good. We have an awesome construction partner that like they're actually ahead of schedule. So that never happens, right?
Are they part of the deal, or are they just contracted out?
Contracted out, yeah.
Cool.
But we've kind of just said like, hey, we'll bring all of this to you, and so they're stoked on it to do all of these projects. Um, a big part, just we're super. I'm really really bullish on the Midwest market. Like we've done a lot of research and just looked at some of this stuff. I pulled some Harvard studies, and the age demographic, that 55 plus, there's more high income and more of that age that's moving into multifamily maintenance free units.
Yeah.
Because the affordability rate to go into the same level of living in a new single family just isn't there. And there's the safety component too, just in today's world. And then same thing in the younger demographic, but the income is increasing of people going to multifamily. It's weird. And they don't expect it to change. But the land in the Midwest, comparable to the rent ratio, is still pretty cheap.
Mm.
And so when you're developing that, obviously, I was telling somebody the other day, it's a super unique process to like actually acquire the land, then get it zoned, and then get it reappraised with the new component of what it's actually now capable of being. Just like a value add, when you renovate some stuff, you can get some value pushed in there, but that land you can explode the valuation of it when you now create, this isn't just dirt here that was maybe going to be some homes. Now it's a performing space for a business that is going to create impact for this area of the city.
How do you make sure that you're able to rezone it and get it to be approved for what you need it to be? Like, I've heard that you can actually put that in your purchase agreement, like, hey, contingent on us getting it zoned or whatnot, because you don't want to go buy a ton of land and be stuck with something if you can't use it for what you intended. How do you vet that?
No, we
Yeah.
definitely know how to do that. And I have a funny story on that. So this is a good example, and this is just how we do our due diligence. I think everybody's different. I was looking for a storage deal, and there's a local city that there's like the city just they won't rezone anything left for storage. But I had found that there's one part left in the whole city that's still zoned. And this is an exploding area. There's a ton of it's super, super needed. It'd be great. I get a hold of the guy who owns it. It's not on the market. We go check it out, and he already has the designs to do the whole thing. Like it's ready to go.
And it's already zoned
He's like,
for
hey,
storage.
it's already zoned, but the caveat was we know that this city's pretty particular and you need a specialties permit. And so we
Mm.
said, hey, sweet, we'll do this. But in our offer, like same thing, we said we want 120 days pending that we get the specialties permit. If we don't, like, dude, there's just no way. Well,
I
they
love
just
that.
took it, and somebody else undercut and said, I don't need that. And we just weren't willing to risk that. And this other person did it. Like, I don't know their story. I know they own a lot of storage in the area, so it might have just been their hedge of we just don't want anybody to play in our arena, and we'll eat the loss if we can't. But it did work out because I drive past it every day on the way to my Vivint office, and it's going up. So they pulled it off, and I laugh about it. But it's still a good principle. There's always another deal out there. There's always another
Yeah.
deal, and if it doesn't feel right, like the number one rule in these big deals, like you just can't lose money because you could get yourself in a hole quick.
Right. So you presented this offer with the contingency on getting the special permit. They accepted the offer, but it's not like residential where they're required to honor that. They're able to take another offer even if they're entertaining yours. They're not locked in.
Yeah,
Mm. Well, that's too bad. It's nice that you can just have it locked in and you know what you're getting.
yeah, and there's definitely. I think in the bigger arena, there's some nuanced stuff, but there's also
Sure.
there's so many opportunities. Um, so
Yeah.
you just
No,
don't
and
sweat it.
I love that mindset that you have where it's like, yeah, like just get a different deal. Like it's not the end of the world. I have this phrase I tell myself when I'm buying deals. It's like it's one of 100. So if it falls through, who cares? If I get it, but it's not the perfect asset, who cares? Because it's really easy to like second guess yourself. Like, was this really the right deal I should be doing? And it's like, what if there's a better deal? It's like, yeah, there better be a better deal because this isn't my last deal. like it's one of 100, and so it's like, yeah, this isn't the best deal I'm gonna find, and I don't know if it's perfect, and it might fall through, but it doesn't matter because it's just one of 100. And just like keep that mindset, I think really kind of just, and for me, it puts me in the right headspace.
Yeah, dude, it's a lot of fun, and as we've done more and more of it, we've just kind of developed our own little like thesis, and we've gotten pretty good at it. And we're targeting, specifically in the Midwest region that want like that $5 to $10 million asset range. And the reason is we've realized a lot of stuff past that institutional money, it gets really competitive. And
Mhm.
they're competing there. But in that sweet spot, it's outside the retail investor, and it's also like too small for the capital allocations for the institutional firms. And so we're able to go in and a lot of these things, these 25 to 40 unit deals, or these smaller retail, like commercial shop. We bought a commercial plaza. It's the only thing they own. They're not investors. It was an accounting play at some point from a separate business. They're
Mm.
usually capital starved. They're undermanaged. They're undersupplied. There's a vacancy issue. So there's just a lot of opportunity, whether that's the raw land of who owns it, or like what could be done there, or the actual assets that we're buying.
And are you guys self-funding this stuff through like the businesses you guys own, or do you guys raise money for these?
Yeah. So historically, we self funded everything,
Hmm.
which I know, right? Anybody listening, it's like, oh, nice, right? But it, I think in a lot of these bigger deals, like his income, and then what I go do on the side, we've been just aggressive, and the banks like that our active income isn't actually tied to
Hmm.
flipping or wholesaling or any of those other things, because it's outside the market of what we're investing in. So it's just not
Yeah.
as it's more diversified, if that makes sense. But so far, we've done everything. We're super blessed to be able to do that. But we are actually launching our first fund, and so we're gonna scale up and let other people play. Really not for two reasons. We've had enough people ask us if they could participate, and
Yeah.
we also just want to go a little quicker. Um, and so we feel it's a great way to serve and have it, the most professional way to like bring people on into those type of deals.
I love that. So if people want to be able to follow up with this and like invest in the fund or learn more about it, what's the best way for them to like keep in touch or reach out to you?
Yeah, so we're this has been my project for like the last year, dude. It's because doing the deals for us is one thing. Bringing in the SEC compliance has been like a whole nother
Yeah.
world of. I've been
Hmm.
on calls with attorneys and reading books you've never heard of, that no one's
Yeah.
ever heard of. It's a whole new freaking language. But um, anyone who like you on my Instagram, obviously you can DM me. We can put you on a list, and then we're going live here in like literally the next 5 to 10 days as we're
Oh, cool.
onboarding our administrator. And we're actually rolling in. We self-funded the acquisition of the land and all these for these senior homes, but we're gonna roll that in just because we know that everything pencils. And for our first fund, we want it to be just a really great experience.
That's awesome. So what's your Instagram handle?
Ty Thorne. Yeah,
Awesome.
you can
That
just DM me if you want any information. It's all for credit investors, but we'd be happy to put you on a list and shoot you some info when we tee up.
that's awesome. Thorn has an E at the end, right?
Hmm.
Cool. And we'll put that in the show notes and stuff too. But I love that. I think it's super cool. Like you said, the more you can grow, the more opportunities there's for everybody else. You know what I mean? You get in this position where it's like people are coming to you wanting a place to put their money. It's like, cool, if you can solve a problem for yourself, but also solve a problem for them, like how cool is that? You know what I mean? And that's one thing I love about real estate. I say this all the time. It's like it's win, 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 win. Like everybody involved can win. No one has to be a loser at any of it.
Oh yeah, and it's honestly, I think it's more fun to do with people, and
Mhm.
the I think everybody who gets in the game enough starts to realize, unless you're wholesaling and you're flipping and everything that you do is real estate, if you run another business, you're probably not going to optimize your investment in a way that's like the best way for you and the best return on your experience, joy, and dollars, unless you're playing with partners and you're playing in
Mhm.
bigger deals that have the economics for scale.
I love that, man. I love that. Well, we're gonna get wrapping up here pretty soon. I have a couple of final four questions I want to go through, but is there any other kind of pieces to your story or kind of advice or mindset things you'd want to share with the listeners that have kind of helped you get where you're at?
Yeah. Two things. One, uh, just the world that I grew up in. It's just like supercharged me to read and consume information. I'm just a huge exposure is everything. Like you don't know what you don't know. And so just get as much information, read as much, listen to as much of the good stuff. Like you have no idea what might spark something or who you might fall in love with their experience, their route, their strategy or whatever and light you up. And then the other thing is just I I think the most valuable skill is just understanding you don't have to do the whole piece.
Mm,
Even when I house hacked, like a great realtor and a great lender, like they did most of the legwork. I just had to figure out how to get them the information they needed. And a team, especially in the real estate game, like you've got to learn to just be a facilitator of people. You got to be a team lead. So if you can manage well, like go play the game without knowing all of the real estate centric stuff.
and I love that concept. And I think so much in this industry, I see people feeling like they do have to do everything themselves. And even if they're bringing people on, it's like they have people doing stuff, but they're really like running everything. And I love how you're like, dude, if you can just be the coordinator, you know what I mean? Like you just have the vision and just put all the people in the right places that are the right people, they'll do it way better than you. And I just think that's it's almost like egoless. Some people are like, no, I don't want, I
Oh,
want to
dude.
be the man, like I want to put this thing together and have my name on it solo. And it's like, that's probably not always the best move though.
And I think in real estate, it's just the way the industry and the investment itself works. Every a person you bring into, right, the realtor or the broker, like they make money when the transaction's really good. The construction team, like they make money when you keep them busy and the transaction's good and the project's good. Like your tenants, like your property management, your attorney that's
Hmm.
involved, your accountants that are involved, like all of those people, like it's booked into the investment to get paid without you just like forking dollars out for them to do good work.
I think that's an amazing concept to end on. I think that's something I could apply a lot better. I want to ask you kind of these final four questions before we go and get your take on it. So question number one, Ty, what's your dream deal or deal you hope to tackle eventually?
Um, it's funny. So I have literally no idea, right? Well, one day I guess I'll know the who, but when I was taking a little river tour down Chicago,
Hmm.
just one of those amazing office buildings. I couldn't even begin to speculate on what the magnitude of something like that is, but I just think something of that scale and that large, and for so many people would be so cool.
That would be cool. I've done that. Yeah, Chicago's an amazing city, and like, yeah, seeing those skyscrapers right next to the water going through the city, it's like it's breathtaking. I love that. All right. Well, question number two. What's been one of the most pivotal books you've ever read or listened to?
Um, Best book. It's not even about real estate, but it's Ray Dalio Principles. I think
Mm.
just the way he attacks detail of everything in his life, management to decisions, just methodologies. It's so systemic.
Dude, Ray Dalio, that's a rare suggestion, but a potent one. Like, I'm a big Ray Dalio fan. I encourage everybody to go check
I'm
him out.
huge.
And he's cool because he's really many levels deep, right? Like, he understands things on a whole nother level. But what's interesting about his book, at least some of them, he'll have like these bolded parts where it's like, hey, if you want to skim the easier part, read the bold parts. If you want to get like 2 levels deep, read the bold and the italics. If you want to read everything, you can read all of it. And I was like, what a cool way to like let me in when it was, some of it got a little heavy and thick and slow, but really interesting approach to it. But man, he has some depth.
Wicked smart. Yeah.
Yeah. So cool. I love that suggestion. All right. Question number 3. What's one of the most expensive, air quote, mistakes you've made in real estate investing?
Ooh. Most expensive.
Or interesting?
Or interesting.
Yeah.
Um, well, honestly, we've been super lucky, like blessed, and we've been more precise. I feel like we have more control in the commercial stuff and multifamily, to be honest,
Mm-hmm.
because it's managing and different things. Uh, Probably the biggest, like fluke mistake thing. When I bought my very first house hack, and I freaking didn't get qualified till after, and so I had to take a 1-year exemption. I had 2 cars at the time, this like pimped out Rubicon and a Prius. Dude, I had to like liquidate every dollar in my bank account, sell my Jeep to go get the down payment necessary, and just send it for my first property.
Yeah, I love that, man. Sometimes you just gotta like just go for it, go all in, stretch yourself a little thinner than you want to be, but make it happen. All right, last question. What's a final piece of advice you would give to a newbie that wants to either get into any real estate or get into commercial real estate?
Um, oh man, any real estate. I think the house hack. I tell everybody. I try to get every single one of my sales reps to do one. I think you can almost not mess it up if you're going to live in it. Right? Like it's just do it. Just get started. Go through it. You're going to see so many things, and just doing the paperwork, going through the inspections, going through the cycle. You're going to learn a ton. Uh, Anybody trying to get into commercial, like team, like you're going to play in those assets. Like nobody's doing those deals alone. Nobody. Cardone is not looking at those deals alone. He's got an army. Like
Yeah,
everybody's got a squad.
I love that. That is solid advice. Sweet, man. Well, this has been a pleasure. I'm glad we finally got it to work out, and that we're able to connect. I think you add a lot of value. It's interesting to me, though. I don't normally interview people 3 times, and it's like, I'm like, man, every single one's been totally different, though. Like, I'm like, it's kind of
It
a bummer
has.
everybody couldn't hear all of it. Like, we've covered very different. I don't know. It's been so different every single podcast. I'm like, that's kind of cool. It's never the same. So that was fun.
Been a pleasure, man.
Awesome. We're glad to have you on. And when you get that skyrise next to the water in Chicago, we'll have you on again and we'll talk about it.
Yeah, if I ever pull that off, we'll invite you down.
Love it,
That's a
dude.
pipe dream.
Love it, man. All right. Well, this is Joe Jensen signing off for the Real Estate Investing School podcast, reminding you to normalize what currently feels out of reach.